Naresh Jalan, Managing Director of Ramkrishna Forgings, joins us now. Let's talk about the last 5 years. The focus has been strengthening the company's presence in the CV segment and diversification in auto and non-auto segments. Will you continue this strategy going forward?
Yes, I think we are on a verge that we are looking at more opportunities globally, and we will continue to diversify our business from automotive to non-automotive sector.
So what is your revenue and margin outlook for FY25 and FY26?
I think we are aspiring to improve our margin by 100 to 150 basis points going forward.
Jalan, you've consistently increased your focus on the export markets and have said that, you plan to increase the share of exports from 44% to 50% as well. When is it that you think this target is going to be achieved, and what really are the steps to get there?
So I think we are looking at almost by FY26 to be almost 50-50 in terms of our exports and domestic contribution. And I think we are improving our presence in European market considerably and the South American market. And we expect these two markets to outperform in coming years. We'll bring in new businesses from there.
You also did get secured a board approval, right, for setting up a manufacturing facility in Mexico, which I guess is going to be operational in the next 4 to 5 months. What is the capacity? What kind of revenue potential do you see from this particular plant, you think?
So this year, I think this is going to be extremely small. We are looking at only 8 to 10 crores revenue from our Mexican operations. From FY26, I think real breakout is going to come in this operations, wherein significant capacity is going to get added over this year, and next year we are going to see the major revenues coming through this. And at peak levels, we are looking at almost 250 to 300 crores revenue in next 3 years from our Mexican operations.
How do you see things evolving for your export business, especially the American business, in the light of the election cycle there?
I think the market is extremely strong, and I think with the new order wins and the new opportunities which is opening up for us, I think North America is doing extremely well.
Right. The other thing I also wanted to understand was, whether or not any of these geopolitical unrests are impacting your business in any way. And, in your talks with your customers as well, do you think there is any negotiation which is currently underway when it comes to freight costs, for instance?
Yes, we have in last quarter been almost impacted by 17 crore rupees in terms of the extra freight we have incurred due to the Red Sea issue. And we are in negotiation with our customers to share some of the burden of the extra freight which is going on. And we are very confident that in coming days or months, we will be able to convince our customer to share the burden of the cost increase in freight.
There is chatter and there is expectation that the Railway Wheels manufacturing facility is going to be collaborating with Titagarh Wagons, and that's going to be commencing its operation by the end of FY26. Wanted to understand if it's still on track, what kind of... we seem to have snapped that line. Just going to get back to RK Forgings in just a bit. In the meantime, let's just take status check of what the market is up to, because the Nifty did manage to perk up to their all-time high. Bajaj Finance, of course, your largest contributor today, the stock holding up 6.5% as we speak. There's Bajaj Finserv in tow, about a 4% uptick there as well. ONGC has been very strong today, a 3% uptick there as well. Tata Steel, Tata Consumer, Shriram, ICICI Bank, they're all holding up in the trade right now. And PFC is seeing another 3.5% move. I mean, this stock has been in a tizzy for the last 2 trading sessions. And today as well, it's running up as we speak. BHEL, though, that's a big star performer from within the broader end. 7% of an up move coming in there.
If you like this video, then like, share and subscribe to ET Now.